panelists on the line.
This
When
is
you are
Bert.
ready to begin the presentation, press the Start Broadcast button
Yeah,
on the
I was on another
GoToWebinar
webinar
control
with
panel to allow
some
all
other folks.
attendees
That's
to
why.
hear you.
Okay.
This system will notify you
Bye.
once you
You
begin
bet.
your
Thanks, Bert.
broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Okay. Let me show you my screen. All right. You guys hear me okay? Sorry for starting late. I was talking to Cindy and Teresa, and then we ran over. So let's make sure. Bart, can you do me a favor? Give me a thumbs up that you can hear me and see the screen. Or Joyce. Okay, good. Thanks. All right. So it's let me get my head on straight because there was a lot of things going on there. Let me close that out. Let me get this in front of me. All right. First order of business. Today's Thursday, 1 o'clock, and it's December 20th. So what we're going to do is we're going to spend an hour going over the CFRN trade setup in slow motion. Okay. So the goal is to go over the setup. Okay. As you see here, we'll talk about what it is, how it works, some of the buzzwords, the method, the rules, all that other stuff. Okay. And then what we're going to do is we're going to hop into a live environment, and we're going to take those same rules and we're going to apply them. Okay. The markets are moving, so there should be plenty of action. So the goal is to teach you the method in slow motion and then apply it here inside the market. I'll go inside the platform, inside the DOM here, and I'll be buying and selling things. I'll show you how to put the trade on, how to manage it, take them off, all that other stuff, okay? So that's kind of the game plan. If you're brand new, this is going to be a great syllabus for you because you'll get to know what the setup is, but also during the trial, I think you'll be able to absorb more. You'll be able to absorb what's going on inside the training room. So as you hear Michael and see Michael put trades on and take them off, maybe you'll have your eyes will be a little bit wider when you're in there, okay? And then at the end of the trial, maybe you have a better understanding of, hey, whether or not you want to raise your hand and push the PayPal button or not, okay? If like Bart and some of the other guys, for you guys, it's another hour you guys get to spend in front of the markets, ask questions. I'm going to go over some things that other guys do, some little traps they fall into. So I'm going to make some observations, and hopefully the idea is to tip the scales in your favor and keep you out of some of those traps, okay? And then you'll get to learn more and more about the personalities of the market that we're trading. So it's a benefit across the board, okay? It's a win-win. Before I get started, I do have to go over the disclaimers, and I don't like to just throw it up there and tell you to take a few minutes, but I do like to go over it because I've been doing this for almost 25 years, and I've really seen the good, the bad, and ugly with this thing and this business. So it's worth the extra time. So the disclaimer is really meant to scare the new guys, okay, that are just getting to know our space, learning what futures is all about, and it's out there really as a warning flag that, look, this is a leverage business. If you're not using stop losses, if you don't have rules, if you don't have a game plan, if you're not engaged in the market, if you're not watching the market, if you're not watching your trading account, okay, you can lose everything and some in your trading account. And, leverage could be a double-edged sword. It's great when you're on the winning side of it, and it stinks when it's against you. So I think it's important to highlight this because it's a reality. When you're not paying attention, this can hit you right smack dab in the face. And the markets are moving. So if you catch one of these markets on the wrong side, it's going to hurt. Okay? The good thing about CFRN is, as outlined and what we're going to go over, is that you are going to have a set of rules, right? There's 4, basically. You're going to have a set of rules. Every trade has a stop loss. You're on a 4-tick range chart. So that means you're looking at the market under a microscope. So now you're going to have to be actively engaged in what you're looking at in the marketplace. So you'll have to be in front of the screens, right? So if you're doing all the right things, all right, and you put the stop losses in and you're watching the markets and you're engaged and you're doing all the right stuff, at least if something does happen in the world and something goofy, happens, at least you're in front of the tower here, or the DOM. Okay, this is where we buy and sell things. At least you're in front of the market and you could hit exit at market and cancel and get out of Dodge right away. Okay? Because the fact of the matter is, in the end, if you're doing all the right things and you place the stop, there is a possibility that your stops could get jumped. Okay? So if that does happen, like I said, you're going to hit the panic button. You're going to freak out, but at least you're going to be in front of here, this tower, the depth of market, and you can take action. Okay? So that is what this disclaimer is all about. Okay? It's a warning flag to say, hey, this is a leverage market, and you can lose everything and some. So I don't like to just throw it up there and say, hey, take a few minutes. I do like to give you my side of it, I guess, is my way of saying it. All right. The thing with CFRN, to go back to this thing. Usually the guys that get to CFRN, they've been to the other rooms, the other gurus. They've learned some things along the way. So they're kind of numb to this. They've been beaten up and bruised pretty good. All right. So they get this. That's why I said the disclaimer really is for the brand new guys. Okay. Because you don't know. What you're getting are emails and advertisements and marketing stuff that says, hey, man, you can make a ton. You can make, do this, do that, do this, do that. And again, if you're not watching the store, this will kick you right in the gut. All right. So again, the idea is, eyes wide open. Okay, that's my point. All right. Second slide. My relationship with CFRN. Okay, there is a line between us. Okay, I am Daniel's Trading. Okay, CFRN is, like as the disclaimer says, the third-party indicator, their apps, software. It's their trading tools. They're the educator. Their indicators are basically built inside our platform. And the platform is DT Pro. It's the same platform that Michael and Dwayne use inside the training room. Okay? Yes, I'm in the room every single morning. I'm in the background. If you guys have questions about the setups, the platform, downloading it, getting the indicators up and running, again, even trade setups, or hey, I have questions about this or that, I can answer them because I've been involved in it from day one. Okay, so in day one, I think it started 8 or 10 years ago. But when it first started, it was just a radio program. It was just Dwayne and radio guests, and he reached out to me in some form or fashion, and he said, "Hey, come on the radio. Add some comments and commentary. We'll talk markets. Our audience is always asking questions, so it would be great if you can answer those." So it started off as a radio program, and then what I noticed from my end is that everyone kept asking them, Show us what you're doing. Show us how to do it. Show us how to do it. And then he got, him and Michael developed a relationship. They're TradeStation developers. Our platform reads easy language, so it was easy for them to just code it right into DT Pro, and the platform is free, so nobody really had to buy or lease the platform, so they were saving money there. So it's kind of just perfect timing. Okay, the bottom line is kind of perfect timing, but there is a line. Okay, I don't work for CFRN. They don't work for Daniels Trading. It's separate. So if you decide to go down that path, if you're going to hit the PayPal button, that's between you and them. If it's anything on their website, like the videos, the members area, the workshop, the Logic 247, the daily doubles, all that stuff, you would correspond with them directly. When it comes to the platform and the indicators, I represent the brokerage too. If it comes to opening an account, funding the account, all that other stuff, you're going to come to me. Okay? Basically, on my end, I have a tendency to spoil everyone because, for me, I like to be treated that way. I like to pick up the phone and call somebody. That's important to me. So if I have an issue, it's nice to know that Bert's going to pick up the phone every time I call if I have a question. So, I spoil you guys, and it's a mutual benefit because obviously if you guys do well, I'm going to do well. So to take an hour out of my day on a Thursday, to teach you guys or, talk about certain things, that's great. If I can do something to give you guys an edge, it's good for everyone. So, so that's the scoop. All right. That is my relationship with CFRN. A lot of guys will call me up and say, hey, can you tell Mike and Dwayne to call me? All right. So that's all fair game. So the bottom line is I always answer the phone. I always get an email. I answer the emails. If you need me, just call or email and I'll definitely respond. Okay. But there is a fine line and I have to tell you that. And, one of the biggest questions is people always say, well, then that probably means CFRN is getting part of the commission. And they don't. They haven't. They didn't even ask. They can't from a compliance standpoint. They're not registered. So, but it is a valid question. It's one I get, and that's why I share the question. So, I don't think my data is flowing here. So let me see if that shakes it up a little bit. I might have to go to the live account. I'm not sure what's going on here. All right. But anyways, all right. So we knocked out the disclaimers. Now we're going to get right into the trade setup. Okay. Guys, Bart and the other guys, if you guys are, you guys have heard this probably a dozen times. So if you guys want to get coffee, that's cool. You're not going to hurt my feelings. This is basically catered for the new guys. All right. So here we go. This is the setup that's been around from day one. This chart was, basically copy pasted in 2012. Hasn't changed. I think Michael actually made a copy of this and created this. So I use this one because it's been around from day one. Some of the other trades have been developed along the way, but this one's been around, so I always go to this one. But the first order of business is the time frame. And we're always on a 4-tick range chart. Doesn't matter what market you're trading. We're always on a 4-tick range chart. So if you have DT Pro, okay, upper left-hand corner, you might be on a 5-minute chart. You might be on an hourly chart. But the bottom line is you want to hit this drop-down box here. Go down to Custom and select Range Bar. Make that one look like a 4. Then hit OK. It should look something like this, okay? Make sure I'm getting, no, I am not getting data. All right, it should look something like, it should look smooth, okay? One of the biggest traps that people fall into, they hit this custom box. They'll select tick bar and make that 2 look like a 4. If you're staring at something that looks like this is wrong, okay? That's usually the trap. Go to the range bar. It'll have a little R in parentheses. It's smoothed out like this. Okay, that way you know you're good to go. Okay, 4-tick range bar. That is the time frame. Let me add a curveball to this. Some of these markets have been flying. The NASDAQ, the Dow, on a 4-tick range, they've almost become untradeable because of the time frame. What has happened is people have gone to the 8-tick range chart. Okay, it's the same way. Instead of change that 4 to an 8, and you're just on a larger time frame. Okay, the difference, the setup is the same. That doesn't change. The risk is what changes. Okay, so if you're on a 4-tick range chart, you have an 8-tick stop. If you're on an 8-tick range bar, then your stop is 16 ticks away. All right, it's the height. Okay, the height of 2 candles. That's what you're risking each time. All right, I threw that out there because that's what's been happening with the NASDAQ and the mini Dow. So 4-tick range is the one that we always use. But if you wanna slow things down a little bit, the 8-tick range is your next thing. So the time frame has been selected. So now we're going to work on the price action of the chart. Okay. I'm sorry, my phone keeps buzzing. So here we go. The red and blue line that you're seeing here is referred to as the MA1. Okay, MA1. The green line is the BBC. That is short for bullish and bearish cross. So together, that makes up step number 1. Okay, so here's the scoop. When the MA1 crosses the BBC and the MA1 is red, that is a bearish cross, pointed out here on the graph. If it's blue, that is a bullish cross. Okay, that kind of sets everything in motion. Okay, that's the first thing that happens. Okay, the one that's highlighted here, okay, this red arrow, this is a bearish cross, and it's a bearish cross because the MA1 is red. So I do want you to think about colors, because in the end, what we want is everything to be the same color. Okay, we want the MA1 to be red. We would like to see then a red candle, which is a down close. We're going to want to see a red cycle, which I'll go over shortly. We want everything to be the same color because that puts the probabilities stacked in our favor. Okay, so step 1 is the cross. And this one is a bearish cross because the MA1 is red. Okay, so that's step number 1. Okay, step number 2. What's normal after the cross is at some point the market is going to gravitate toward this green line or the BBC. That's normal. Okay, that's what we expect to happen. Okay, so what we're looking for is the market to flag or gravitate or trade toward the BBC, which is the green line, and then close in the direction of the trend. We define the trend as being down by that bearish cross. And MA1 is red. We're looking for a red candle, right? We're looking for a red candle. So that is step number 2. We're looking for normal, which is the market to gravitate toward the green line, touch it, and then close in the direction of the trend. Okay, so that's step 2. So now what happens is our eyes are going to gravitate toward the slingshot, which is the oscillator portion of the graph here, the chart. Okay, some more buzzwords here. The blue and red line here is referred to as the cycle. Okay, and the green line, well, there's nothing special about it. It's just called the green line. Okay, but what's important, okay, is the separation between the green line and the cycle here. Okay, so stand by. My phone's buzzing. So let me put them on hold. So 1 sec. So I'm going to mute you real quick. How the heck am I doing this? Here we go. Okay, I'm back. So we're working on step number 3, which is the oscillator portion of the slingshot. Now, guys, the trade exists down here in the slingshot, in my opinion, okay? Because here's the scoop, okay? This is what this is all about, okay? Breaking this down, what the cycle is telling us is, look, it's red, okay? We associate red as being bearish, right? We got a bearish cross up here, and we have a red candle or a bearish close, okay? We're looking for a red cycle. And what this is saying is, hey, the trend is down, all right, on the 4-tick range chart. The trend is down. And the green line pulling away from it, combined with this price action here, what this is suggesting is, hey, this is just an air pocket in this ongoing downtrend, all right? So combined, okay, this separation of the green line, which we refer to as the divergence, Michael now calls it separation, but together, that is step number 3, okay? This is what you're looking for. In a bearish scenario, you're looking for the cycle to be red, as it is here, and it's highlighted, and the green line to be on top. The space in between here is the divergence, okay? So when all these 3 things align, then there's nothing else to do, okay, but to go inside the DOM, and the DOM is this thing here, okay, and get short. And we get short by left-clicking in the red, and if we make money as the market goes down, okay? If we get a bullish setup, okay, and everything lines up, then we're going to be left-clicking in the green. And the way we make dough is if the market goes up, okay? So the DOM, this tower here, is where we're going to do all our buying and selling, okay? It's right here, okay? We're going to be in the green if we're buying it. We'll be in the red if we're selling it, okay? And I'm going to show you how to do that later, so no biggies, okay? All right, so that's the deal. Now, to kind of expand on this, okay, this is telling us trend down, okay? This is telling us the green line pulling away combined with this is saying, hey, that's just an air pocket in this ongoing downtrend. And together, we're going to go inside that DOM, right, and get short. What we expect to happen in the end is this green line is ultimately going to come down and touch, okay, and close the gap and touch the cycle. It's at this point here in the game that we're going to get out of the trade. Okay, this is where we get out. So what we expect to happen is the market to make a new pivot low. And it's at that point here we're going to close it out. All right, because what we expect to happen is a green line to do this. Pull away, close the gap. 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 And then what's going to end up happening is there's going to be a trend change, right? So now the cycle is going to turn blue, and we associate blue with buying, okay? So we're looking for buying opportunities. So guess what? We're going to look for the green line now to get underneath the blue line. Pull away, close the gap. Pull away, close the gap. That's normal, okay? And we know the markets aren't normal, and that's why we use stop losses, okay? All we can do is kind of forecast what's supposed to happen. It doesn't happen all the time, so that's why we use the stop loss. They define the risk as an 8-tick stop, okay? So that means if you're brand new, if you're dead wrong, if you're trading like the gold or the crude, you're losing $80 a contract if you're dead wrong. If it's more like this, if you're trading the soybeans or the S&P, it's closer to $100. If you're trading the mini Dow, well, it's $40, okay? But the bottom line is you are going to use a stop loss. And in addition to that, as the market does move in, as it goes in your favor, you're also going to trail the stop, okay? And we're going to be aggressive about the money management, okay? So, in a nutshell, okay, if you go down this path, you're not learning to pick the top here. And you're not learning to pick the bottom here. And you're not learning to trade it from point A to Z. You are learning to take a piece out of the middle. Okay? And along the way, as you get into the trades, you're going to move the stop, move the stop, move the stop, move the stop, until what? The green line pulls away and eventually closes a gap, and you get out. And when it happens again, you're going to sell it again. And it closes the gap. And when it does it again, you're going to sell it again. Until that, again, that cycle turns color and it gets bullish. The green line is underneath, and now you're going to start buying the dips. Okay? That's what you're signing up for. You're on a 4-tick range chart. So that means you're looking at the market under a microscope. That means you're going to do a lot of trading. That means you're going to have to be in front of the screens. It's rule-based, so you're going to have to be following some rules and having some discipline. So that's what you're signing up for. You're scalping. All right? So you're going to have to learn the rules. I'm going to teach you the rules the next 45 minutes. You're going to have to learn how to press the button on the DOM. Okay? You're going to have to learn to put trades on and take them off. Okay? Now, my understanding is the demo is screwed up. Okay? So let me try to download it again. If not, I'll just have to go to the live account. So 1 second. See what happens. Stand by for DT Pro to log on. That's my username, by the way. Yeah. All right, forget this. I'm not going to waste our time looking at that thing. By the way, you notice how I'm saying remind me later with the, when I log in. You should make a habit of being the last guy or at the end of the line to upgrade or your platform. Okay, this is the live. Same username and password. No, I don't. All right. That's more like it. Okay, so I'm on the live platform. That's why it's flowing here. So if you have a demo and it's not updating, my understanding something's wrong with it. So, all right. So here's the deal. We're going to take what I just went over, and we're going to jump in here and just do it. Okay. So I don't know. I'm going to start with the energies. Okay. So the first order of business. Okay. If you're writing things down, number one should be, are we trending? That's number one. So what I want you guys to do is to get in the habit of hitting the zoom out button, this red magnifying glass. A lot of times you're looking at Michael's chart and it looks something like this. Okay? It's going to look something like this. Well, at first glance, you have a bullish cross. The MA1 is blue and crossing the BBC. What do we expect? The normal thing to happen is the market to gravitate toward the green line, as it does, and we're looking for a close in the direction of the trend. That candle right there is the pullback and the close in the direction of the trend. Is the cycle blue? Yes, it is. So that's good for the home team, and the green line is underneath. So we have that separation, right? So you actually do get a reaction, right? So that looks all good and dandy. Everything looks up to par. Again, I want you to get in the habit of zooming out. Because if you do a few clicks here, you might find out if we were looking left here, okay, I'm not sure if we were really trending here because we did bang off a resistance right here, okay? So in real time, if faced with this, I wouldn't have taken it. There was an opportunity to make a few ticks here, okay? But again, from my point of view, we weren't trending. So what I want you to do is to get in the habit of just zooming out. Because look, if you zoom out a little bit further, this looks like a mess, okay? We're stuck in a range. And if you're not sure about that, look at your dynamic support and resistance, how they're side by side here. That's usually a good indicator. Okay. If you're not sure, look, when in doubt, just stay out. But really, the support and resistance dots are pretty much side by side here, right? We're not going anywhere fast. This is where the majority of you guys will get chopped up. Okay. Because you're not looking at the bigger picture. Now, I'm not asking you to go to a 30-minute chart or a 5-minute chart, okay? I'm just asking you to zoom out. That's all you have to do, okay? And by doing that, all you have to do is, again, hit the red magnifying glass, okay? So if crude busts out here, we'll trade it, but right now I don't see anything happening there. Natural gas, a totally different picture, right? Okay. This one looks obvious. It looks like it's trending. Okay, we just busted out of this little congestion we were in. So this one kind of hit you in the face, okay? Notice how I zoomed out a little bit just to get a larger landscape of what's going on. So for me, if we get the normal or get a pullback toward the BBC, I am interested in buying the natural gas, okay? So let's see what happens. We'll come back to this one because it's got some work to do. But natural gas is trending, and we're looking for an opportunity to buy on a pullback. Okay, so let's see what happens. Okay, here we go. Let's go to the crazy indices. Okay, notice the first thing I do, which is number 1 on your sheet. Are we trending? Well, we have some higher highs here for now, so I would say yes. Yes, I know that the S&P is down 36, but on this time frame, we are actually making some higher highs. All right, so we are going up. Okay, so this pullback here, okay, this was the first pullback to the BBC with the up close. It started here on this green candle, but notice the color of the cycle, okay? Here's one of those big fat disqualifiers. When that cycle turns red on you and starts sloping against you at a 45-degree angle, as it does here, long trades are avoided, okay? We want to stay away from the long side. What this is implying is that the market is going to do exactly what it's doing. It's going to go down, okay? Again, as I said earlier, what we want ideal setup is we want everything to be the same color. So we want that cycle to be blue, and ideally we'd want a very good slope to it. Okay. Right now, we had a bearish cross. We're actually looking for bearish opportunities. Okay, and that's more in line with what the trend's doing. Okay. Now we got a little bit of support here, so I'm going to see if we can get a little rally here to sell into. Okay, so right now the S&P is more in a bearish formation. So my phone's buzzing, so one sec. Okay, back. All right, so we're looking for bearish opportunities. So again, look at the color of the cycle. It's blue and pitching up. Okay, that is not good for any kind of shorts right now. Okay, and notice what the market's doing. It is going up. Okay, so right now, let's table the ES. Let's try to find something we can actually push a button on and take action on, and we can talk about. Okay, so let me go to gold. Let me see something's going on there. Okay. This is pretty cool because there is some action going on here. All right. First thing on your plate, are we trending? Get in the habit of zooming out. we have a little bit of support here, so I'm going to expect a little bit of a bounce, okay? But this has got some things I want to talk about, okay? So number one, the bearish cross. That is step number one, right? Now, what we expect to happen is the market to gravitate toward that green line, right, or the BBC, okay? The other thing I want you guys to do and get in the habit of doing is as soon as you get that cross, what I want you to do is activate that trend line, okay? That's the next thing you do, okay? And the reason is, as we start gravitating toward that green line or the BBC, I want you to get in the habit of drawing trend lines. And the reason is, okay, is that sometimes the market has so much bullish or bearish momentum that he can't even get back to the green line, okay? And if you're faced with this, where it's trying to get back to the green line or the BBC, and then closes below the trend line like that does, and we have a red cycle, and we have the green line pulling away, and we have that separation, this is a short right here. Yeah, that's a shorting opportunity, okay? As long as we're making higher highs and lower lows, as long as we're trending, that's a sell right there, all right? So what I want you guys to get in the habit is, as soon as you get this cross, Brian, you're here now, as soon as you get that cross, the next thing that you're going to do is you're going to activate that trend line right here, okay? You need to activate it, okay? And I was just telling the guys, because we don't know if it's going to do the normal, and the normal is for the market to challenge this green line. And so what you need to do is get in the habit of drawing the trend lines, okay? Because if it breaks it, okay, you got to be in a position to take action. And that action is to basically get inside the DOM here and left click. All right. All right. So if the gold comes back up here and starts challenging the BBC, we're going to try to go short as long as the cycle is red. And we are making some lower lows, so we are trending. So the short side is where we want to be, okay? So we're looking for the market to rally first, okay? Guys, if you have questions, fire away. Just put them in the question box and I'll answer them, okay? All right, so let's go to, all right, I'll go back to the S&P again. It's really taking off here, okay? Yeah, it's hopping around so quick, it's leaving gaps even on the chart. So just let that be. Let's go to the euro. Hey, Brian, by the way, I was just told that the demo was acting up. So that happens on the demo. The demo is on a separate server than the live, just so you know. That's why I'm using this live account. All right, so here we go. First thing on your plate, first thing that should be on your piece of paper, number one, are we trending? Do we have higher highs or lower lows? Brian, as I told everyone else, you got to get in the habit of hitting the zoom out button, okay? You want to see more. You want to see a bigger picture here, okay? So right now we have the bearish cross, okay? And we're going to run into a little bit of support here. So I'm going to expect a little bit of a rally toward the BBC. And not only that, you do have green dynamic support printing here, okay? We do have the bearish cross, okay? The MA1 is red and crossing the BBC, so you should be looking for shorting opportunities, okay? So as I just said earlier, as soon as you get the cross, activate the trend line. Why do we activate it? Because we're expecting this market to get back to the BBC. If it doesn't, we're drawing trend lines, and if it fails, we're going to take action and left click on the red here, okay? So that's the game plan for the euro. So we're looking for the market to come up here first, okay? We're looking for it to challenge this green line. We're looking for it to do this right here, okay? And in the process, what we would end up doing is drawing that trend line, right? Right here, drawing that trend line, okay? That's what we're doing. That's what we're looking to do, okay? So the euro's in a position to go down. That's not surprising that the gold is in a position to go down, right? They should be going together because that means dollar strength, okay? Even though the dollar's down, in this time frame here, the 4-tick range, something's changed, okay? The change has probably been the S&P. We're at 2481 and we put a low in at 2441. So we're 40 points off the low. So maybe they're taking some of that risk asset off the table here and you're starting to see a little bit of a change, okay? This might be in a low. We might have seen the low in the market today. All right, so that's what we're looking for. So let me go to, man, this natural gas is moving too. Okay. So again, here's another example after the fact. Okay, I hate doing this, but I'm just going to do it. A class, I'm basically drawing trend lines. This is how your trend line should be drawn. This is natural gas for January. I gravitate toward the natural gas on Thursdays because there's an AGA report that comes out. I know it's going to kick the markets around. I can count on volatility, so that's why I go to the natural gas, and I know the personality of it. Right now, look, we had the pullback to the BBC, but look at the cycle. First of all, it's flat. It's red. It's a different color. This is messy in here. So right now, natural gas is walking the line, is going down the path real smooth. But the cycle right now is real sloppy, so there's nothing to be done there. Okay. Crude oil. Notice the first thing I do is zoom out. We're making some higher highs. That tells me we're starting to trend. Brian, before, as I told everyone else, get in the habit of hitting that red zoom out button, okay? So now we're looking for potential buying opportunities. We're looking for the crude oil to come down to the green line, okay? This is a bullish cross here. It's happened. So what you want to do next is step number 2 or 3, activate the trend line and get ready to draw. Okay, so let's see what happens. The fact that this is red already is watering down the probabilities, okay? The fact this is red, it's going to require a trend line to be drawn, and it's going to require that the market close above that trend line before we push any buttons in here, okay? So we're looking for the crude to go up, or we're looking for the pullback, okay? Again, not a surprise if this is moving up, if that S&P is moving up, okay? There's another trend line. That's a close above the trend line, okay? Okay, so there's some opportunities here. They're just moving real quick, and I can't get to all of them all at the same time here. All right, so here, let's see if we get another pullback here. NASDAQ is only 40 down on the day. All right, there's that pullback to the BBC, right? That is that first up close. Okay, there's the green line. Okay, big fat disqualifier right there. Okay, this is where you guys will fall into that trap. Okay, that lights the match to the long side, but that cycle is red and at a 45-degree angle against you. That's a sloppy way of drawing it, but right here, that angle there, that's no good for the home team if you're looking for shorting opportunities, okay, or long opportunities, okay. Man, things are moving, so let me try. I'm going to hop around here on you guys, so 1 second. That's the gold. Eventually, it's getting to the BBC. I'll go back to that one 1 sec. I want to find something I can sink my teeth in here a little bit. It's all right. 1 sec. All right. Let me look at crude one more time. All right. Here's the first pullback in the crude. Okay, February crude. This is how your trend line should be drawn, just like this. Okay. Should look like that. All right. Now, here's what you're going to be faced with. Okay, you're going to draw the trend line like this, and then you're going to have a candle that closes No, not closes, but sticks its head above the trend line, okay, and then closes back into it. What you're going to have to do is adjust the trend line. Okay, it's going to have to look like this now. Hold on, let me clean this up. This is just a sloppy. It's going to have to look like that. Okay, that's how your trend line should look. Let me get Wolfman off of my emails. Okay, that's how it should look. All right, so it's going to require a close above the trend line before we can get excited about the long side. That is the close right here. This activates the long side. Okay, the pullback, the attempt to pull back to the BBC. Okay, we draw the trend line, and that's the close above it. Okay, what's the problem here? We have a red cycle, so the trend line is drawn. Okay, so it's going to require this candle before we can get long. But notice again the slope of this. It's starting to curl over. Now, you guys might be saying, hey, is that 45 degrees? Is that 30? Is it 20? The bottom line is it's starting to curl down. Okay? Ideally, we want everything to be the same color. So ideally, on the long side, we really want this to be blue. The fact that it's red and curling over is suggesting that the crude will just come down or start chopping. Okay? That's what it's implying. So right now, even though we got the up close and everything looks cool, okay, from the buy side, this is the disqualifier. I'm giving you the warning flag right here to stay out of it. Okay, this will give you grief. Now, even if you took this, the market did move 4 ticks in your favor, and look, the result here is a break even. And you know what? It's not surprising because the action that we're seeing here. Okay, what we expect would be chop or potentially down. Okay, now on occasion, you'll get this, you'll get the disqualifier, and the market will go straight up, and you'll blame me. You'll say, man, Bert said not to take that trade. Look, I would have made 10, 15 ticks. A lot of times, it will happen. Okay, that's going to happen. But I'm telling you, the majority of the time, it's going to work against you. Okay, so I'm just giving you those things to kind of stay out of. Okay, that's one trap. All right, let me get rid of Yuri. 1 second. Yuri, can you call me back? I'm in the middle of the webinar, bud. Bye. All right, sorry about that. All right, so that's Yuri. All right, so now natural gas. We need to make some higher highs before we can get long the natural gas. So I'm going to take that off the table. We'll go back to gold. Okay, there's the pullback to the BBC. We finally did the normal thing, pull back to the BBC. The cycle is blue, so that's telling us it's watering down the trade, the probabilities, right? Our trend line started looking like this. Started like this. Okay, started like that. This candle here actually would have activated the short, this one right here. Okay. Right now, I'm not too excited about it because why? This is blue and starting to curl up. Okay, so right now, I wouldn't do anything with the gold. Okay. Let me get this. All right, so let me switch guns. Let me try that crazy S&P here. All right. Okay, we're starting to go back down. This was that warning flag about the cycle turning red. Okay. All right. Let's see if we get a setup here again. Stand by. See, right now it's just moving so fast. I can't even get a trend line in something short. It's moving in chunks. So it's not even worth talking about right now. Okay. Again, a solution to this is go to a 4-tick range to the 8-tick range chart. That'll slow it down. Okay. It's the same setup. Okay. Bearish cross, pull back to the BBC, get in the habit of what? drawing a trend line, a close below the trend line with divergence would set this motion into a short. Okay, same thing here. Draw the trend line. Okay, the cycle is turning blue, so it requires a close below the trend line. We're going to adjust it like this. That does put this in a short right now. Okay, right here on the 8-tick range chart. That lights the match. This is a problem because it is blue. It doesn't quite have that 45-degree angle. This is probably something Michael would do in the trade room. This right here is the short on the 8-tick range chart. Okay, this will slow it down a bit. Okay, but what happens is your risk is not 4 ticks. Now it's double it up. It's not 8 ticks, it's 16 ticks. Okay, so if you find that the indices are just too fast, and they are right now, you're going to have to change that to the 8-tick chart. Okay, but that's the setup right there. That's the close. All right, there was one right here too. All right, so that does mean on an 8-tick range you're going to go for larger targets too. Okay, the same principle applies. The green line pulls away, and what we expect to happen, the green line gets into the cycle, and the market makes a new pivot low. Same thing that happened here. This is normal. Green line pulls away. We expect the green line to get into the cycle, and the market makes a new pivot low. When these come together, this is where we exit. This is where we would exit. Okay? So the trade exists down here. So here we go again. Hold on. Activate your trend line because that's what you're trained to do. Right off the lows. Okay? The cycle is blue, so it requires a close below this trend line before you can get short. When it's a different color, it requires a trend line and a close above or below it. Okay? That is the close below it. Okay? That lights the match to the short side, that trade. Okay? Again, it's blue. It waters down the probability. Okay? It's starting to curl up a little bit, right? So if we start trading here back and forth and give you grief, this is the reason why. Okay? Right now it's cooperating. Okay? But this is starting to curl up. So this is implying, hey, we might start heading up here. Okay, that's what that means. So you have to be careful. And see, the market's trading sideways here. So it's giving you that grief. And when the market starts doing this, what you're going to do is you're going to start overanalyzing the trade and make some silly mistakes. Okay, and look what's happening here. This is not a surprise because of what we're seeing here. Okay, I can't stress that one enough. Ideally, you want everything that same color. Okay. All right, so here's another point, guys. If you have a bunch of trend lines drawn here, a quick way to get rid of it is hit the select all button and then hit the black X and we'll get rid of it. Okay. Let's switch guns. Here's crude oil. Perfect. No, we're not trending. Notice the first thing I did, Brian, is I zoomed out. Okay. This looks like perfect setup, right? That's how the trend line should be drawn. Bullish cross. The MA1 is blue, crossing the BBC. We're looking for the crude to get down to the green line. So that looks good. The cycle is blue. That looks good. The green line is underneath. We have that separation. Okay, everything is a go on the long side. Okay. Again, when we zoom out, okay, we might be stuck in a range here. Okay, so you got to be careful. What you got going for you here is you are above dynamic resistance here. So that's okay. That gets me excited about it. As long as we have a pretty good pitch here on the cycle and it's blue, I think that would be okay too. So right now, the crude is set up to get long. Okay, now Here's what Michael does, and the advantage of using that 4-tick range chart. You know what? I'm on an 8-tick range chart. That's why. Well, all right. Well, here. You know what? God, did I screw this up? Let's dial it down a notch. Okay. That, by the way, is what you want to see. All right, but we should be on a 4-tick range chart. Again, zoom out. We're making higher highs, so you have to like that. We're trending, okay? Again, notice the slope of the cycle had turned red and curled over. Notice the price action, okay? So right now, there's nothing going on in the crude. I'm sorry, I was on an 8-tick range. We're starting to get that bearish cross. The MA1 is red and starting to cross the BBC. The cycle is red, okay? So with some time and price action, we might get actually a potential bearish setup in crude. There's nothing going on there. Natural gas is messy. This is perfect. Perfect picture of a market trading sideways. Notice, okay, dynamic support and resistance are side by side. That's a big clue. We're sideways. And look, we have a double bottom here. We have a double top here. There's no action to be taken here in the natural gas, okay? That's a good one to point out because that'll, because you want markets that are trending, okay? Okay. I went back to the S&P. I'm going to go do an 8-tick range chart again just to slow some things down. Okay. We did get pulled the bill back to the BBC in the down close, but the cycle is not cooperating. So we're not going to talk about that. All right, let's go to gold. Okay. Again, notice the cycle curling up and the action that follows. Okay, negating this short. That was the warning. Let's go to the euro. Dang it, I missed it. Okay. All right, so let's talk about the euro. Bearish cross here. The attempt to pull back to the BBC. Your trend line should be like this. That is the close below the trend line. The trend line is required. Why? Because the cycle is blue. What's going for you is that it's flat. Okay, so this actually could be a shorting opportunity. Not only that, what you guys notice, especially the CFRN guys, is that we did close below the trend line, but we also closed below the MA1. This is a momentum trade, and so as soon as it goes into profit, you're moving your stop to break even, and the result is a break even anyways, okay? So we do have a double bottom here. So if we start making some lower lows, okay, then we'll look to get short the euro possibly, okay? And the question is, zoom out, are we trending? Not surprising to see that we're finding a little bit of support here because this is where we found a little bit of support last time, okay? Man, I was really hoping to find something to... Let me go to the British pound. Okay, British pound, we have the bearish cross. Okay, that's a bearish setup. What we're looking for the market to do is get back to the green line. So we're getting ready to short the British pound. So the next order of business, new guys, activate your trend line. Okay, we're looking for a few green candles so we can draw a trend line to potentially go short the British pound. Okay, so we're waiting. Any questions so far? I'm looking for something. One sec. All right, I'll try the indices again. Okay, I'm going to switch the time frame of a 4-tick range to an 8-tick range. That's the only way we'll be able to do anything. Okay, Zoom out. We're making some lower lows. Okay, here we go. Let's get ready. Okay, here we go. Okay, the cycle's red. That's okay. Normal is for the market to pull back to the BBC. Stand by. David, let me call you back. I'm in the middle of a webinar. You okay? Okay, bye. Bye. Okay, that cycle is turned blue on us. Okay, so the trend line is required. So that's why we draw that trend line. Because if this turns color on us, okay, we're not scrambling to find a trend line. Let's adjust the trend line to accommodate this low. Okay, this is curling up, right? So right now, we don't like the short side. Not only that, here's your next disqualifier right there. Not only is the cycle a different color and going at a 45-degree angle against us, but now that the black step line has pierced the BBC. So that is the other disqualifier right here. Okay? So again, there's basically 3 disqualifiers. Number 1, we better be, if we're not trending, if we're trading sideways, okay, you're not pushing any buttons. Number 2, if the cycle turns a different color, okay, against the trend, like this here, and it's curling up against you at a 45-degree angle, that is the second disqualifier. That is one of those 2 things are the biggest traps that people fall into if they're struggling to make money. They're getting into markets that they're sideways, okay, and they're going against the cycle, okay. The third disqualifier is that black step line. Not only is it good for trailing your stop, okay, but it's used as a disqualifier. If that black step line pierces the BBC, that's the third disqualifier, okay? Okay, those 3 things. Again, proof, why the market's doing what it's doing, because this is turning up against you. Okay, so now we have a bullish cross. So let's see if we can do something on the bullish side. All right, so guess what we're going to do? We're going to zoom out. Are we trending? Yeah, we're going to run into some resistance probably right about here. Okay, but let's see. The cycle is blue, so we can kind of foreshadow, hey, you know what? We got a blue cycle here. We get a pullback. That means this green line is going to get underneath it. So we'll have the bullish divergence. Okay, not surprising we stopped there because of that. Okay, so here, activate the trend line. If we get another red candle, we're going to connect the dots off the 2 tops there. And look, now we're starting to get the bullish divergence. So let's see what happens. Okay, you could draw this trend line like this. Okay, you could draw it like that. The problem is if we get a close on north of this trend line, you're running into dynamic resistance. You're not doing that. That's okay. It's going to be a momentum trade, and we don't take momentum trades into dynamic support or resistance. Okay, that is a momentum trade. Okay, into dynamic resistance, we will not take that. Okay, I know I'm throwing a bunch of stuff at you guys, but it's just the market's just moving real fast. All right, so right now it's off the table for the moment. Okay, all right, it's 10 after 2. We got off to a late start because I was doing a GoToWebinar with Cindy and Tracia in the Virgin Islands, I think is where they lived. Okay. The demo was screwed up, so that kind of stunk because I didn't really get to show you how to get in and out of trades inside the DOM, and I really like to do that kind of stuff. The market really is, the indices are really racing around, so it's really hard to trade. Okay. Again, the solution to that, go from a 4-tick range to maybe an 8-tick range. Slow it down. Okay, that's one way to put it in second or first gear. Okay, there's that pullback to the BBC. Okay, the cycle is blue. Okay, there's the touch. So if we get a green close here, actually this would be a long. That is okay, Slingshot trades into the dynamic resistance is okay. That actually is a long. Okay? Right there. The cycle is blue, and we have bullish separation. Okay? This right here lit the match on the long side. Right here. Okay? Again, the cycle is blue, and the green line is pulling away. So we have that separation. Okay? So it's a lot of variables are there. Okay, now you're moving your stop up along the way. Okay, and here the market is reacting to that. That's not surprising. So I'm sorry, phones are buzzing. Okay, 1 second. I want to wrap this up with a few more comments. So stand by. All right. In the end, what we expect to happen is step number 3. The green line pulls away and ultimately does what? Gets into the cycle and closes the gap like it's doing. What should happen is the market should make a new swing high as it's doing. Okay, so here's the deal, guys. If that's where you got long, you are closing out that trade right now. Why? Because the green line is in the cycle, and we expect what to happen? The green line to pull away again, okay, and reset it. Okay, that's what we expect to happen. That's the normal. Okay, so that's the deal. If you're using an 8-tick range chart, your stop loss has to be 16 ticks. It has to be 8 ticks, okay? 2 candles, so it's going to have to be 16 ticks, okay? That means if it goes 8 ticks in your favor, you move the stop to break even. The rule still applies here. If it closes above the MA1 here, that buzzword, you're also going to move the step line up, okay? Until the green line gets into the cycle as it does here, and this is where you close it out. And again, the reason is we expect the green line to pull away again. Okay? All right. Takeaways on this. Okay? Here it is. It's happening. Okay? Just see what's in front of you. Okay? So here's the takeaways. Number 1, thing that you should be writing down on a piece of paper is, are we trending? That's the first order of business. Okay? Are we making higher highs? In order to do that, you got to get in the habit of hitting that zoom out button. Okay? I'm not asking you to go to a different time frame. Just hit the zoom out button. Okay? Look left. Look at some larger time frames here. Look at a little bit larger landscape here. Okay? All right? That will tell you whether we're trending or not. And when in doubt, if you're not sure, just stay out of it. Okay? You're going to be on a 4-tick range chart again. It's going to give you another opportunity. Okay? Number 2, after you get this cross here, I want you to get in the habit of engaging that trend line. Okay? The reason why you do it, okay, 1, okay, what we expect is the normal thing to happen. We expect the market to pull back to the green line. This is the normal thing. But sometimes the market has so much momentum, it can't get there. So if you get in the habit of drawing the trend line, and it breaks the trend line, and we have bullish divergence and bullish separation, man, you're already in a position to get inside the DOM and left click and activate the trade. Okay? So you're there. So you're already prepared. So that's what you're getting to the point. That's where you want to be. Okay? Secondly, you got to be in the habit of drawing that trend line, because at some point that cycle is going to turn against you, right? As it does here. It turns against you. So the trend line is already required. Okay? And if you have the trend line drawn, then you're not fumbling around looking for it. If you're faced with this, again, you're in a position to take action again and just go inside the DOM and left click. All right? So basically, you're training your mind to go through a set of, rules. Step 1, step 2, step 3, and you're just programming it. Okay? The biggest traps that people fall into when they start spinning the wheels and losing money are the ones that I kind of labored over and over in the last hour. Number 1, we're not trending. You start trading sideways. okay? Like this would be a perfect example. We make a higher high, okay? We get the pullback, that looks cool. But all of a sudden, we don't make a higher high. So guess what? You're going to act on this candle here, this green line, okay? This is what I see. You will act on this one because it pulled back to the green line and it violated the trend line that you drew, okay? Your trend line was like this. And you're like, yeah, I got it. I finally got in, okay? But you failed to look at, it's got a double top here, okay? So you had a lot of the right things, but you weren't waiting for the market to make a higher high, okay? That's a trap people fall into. That's why I go over this. That's why I want you guys to, just keep practicing and kind of review your trades and look at the reasons why maybe you're losing or not losing or what have you, okay? But that's a big thing that people fall into. The other thing is the color of that cycle, right? When that moves against us, number one, as it turns color on us, it does water down the probabilities, right? So you're asking for a little bit of trouble. But as that starts curling, like it is here, okay, that's definitely a disqualifier and you want to stay away from it, okay? So again, sometimes the market will go up, and when it does and you stay out of it, you're going to point your finger at me and say, man, Bert said that was, do the opposite. But again, as time goes on, you're gonna finally realize, I'm right on it, okay? So that's it. That's my story. I'm sticking to it. Okay, we spent a little over an hour on it. I didn't really get to do all the things I wanted to do. More importantly, get inside the DOM and push some buttons for you. But I think there was some value. There's some stuff I really wanted to point out to you. So we do this every Thursday for an hour, okay? And I go over the same stuff over and over and over again, okay? So my advice, if you're brand new, you should be hanging out with me if you have the time. If you are a CFRN guy and you're struggling or you kind of wheels are spinning a little bit, hang out with me on Thursdays. And that's it. Okay. So I will see you guys in the morning. Okay. I'll be in the background. I'm in the background every single morning. So I'll be there. If you guys have questions, call me at the desk or shoot me an email. Okay. And we'll kind of take it from there. Yeah, that's fine, Brian. That's great. And let me see if this crazy demo is working. Oh, I'll shut this down. So, yeah, call or email me if you have questions. All right. So that's it. We'll talk to you next Thursday, and we'll see you in the morning. Oh, and it's been recorded, so I'm gonna do my thing and put it on YouTube as soon as I can. It'll be on there tomorrow morning. Actually, it might be updating here. All right. Anyway.